that are investing billions of dollars in these data centers do not see a return. In fact, this is interesting. And it's also, people started to realize it's killing jobs. And this is the richest guy in China. He's in the whole AI industry. He's a billion gazillionaire. Here's what he had to say.
The people who ask question about the AI bubble, the people who ask that question is not smart enough.
Yeah, we're just not smart enough. We weren't smart enough with the dot-com bubble either, were we? Yeah, we weren't smart enough. We weren't smart enough with the housing bubble. The people going back, 300 years ago weren't smart enough with the tulip bubble. There's always a bubble. That's the stock market. That's what it does. There's always something new that comes on. I mean, go all the way back to the Pony Express. Went from Pony Express to telegraph, telegraph to telephone, boats to airplanes. You always got something new going. And that's where you become strong, because that's productivity, and you got a lot of labor and people are working. That's not what's going on with AI. Now, AI, just like the dot-com days, when now the computers first came out, everybody said the same thing. But at the end of the day, our lives are better for the dot-com, for the computers. And our life is going to be better for AI. But in the beginning, whether it's the dot-com deal or AI, they screw the little guy first. So the big guys can make money quickly. Then after a while, we can all share in it. But see, the way it works on Wall Street, you have to be on Wall Street to understand their mindset. Once all the money in AI is stuffed in their pockets, in their shoes, and they can't get any more in, then they'll let us come in and share. That's how it works. So it's going to be very, very interesting to see what happens this coming Wednesday. People have no idea what's coming. So on Wednesday, they're saying they're going to cut rates 25 basis points. Well, that's not going to work. If the 50 basis point cut didn't work in 2025, why in the hell will a 25 basis point work to help the consumer and help the economy? Why would 25 basis points? It's not going to. But you got to stop listening to these financial TV jibber jabbers. They're all excited about, again, this 25 basis point cut. And they were all excited about, oh my God, Black Friday. Boy, look at that. People are spending. and oh boy, the consumer, he's strong. He's not in dire straits.
Retail sales at Johnson Redbook up 6%. I do not think the consumer is in dire straits by any means.
No, really? Okay, that's good. But let's talk about the lying that goes on in Wall Street. First of all these financial TV jibber jabbers are pushing, and they're excited that we had this 9% increase in sales over last Black Friday last year. Well, it's not true. Now, let's break it down. What they fail to mention is the number of the items purchased, or called units, this Black Friday were 18.2% fewer units, things, purchased, items than during 2024. See, they're not going to tell you that. So they're looking at, oh, look at the sales, we're up 9%. But wait a minute, most of that 9% is increase in prices, not increase in sales. They'll never quote, or they'll never give you the number for units. Now, if you took a look at how many units did they sell, how many things they sold in 2024 compared to 2025 Black Friday, nearly 20% less. 20% less. And people don't have any money. They don't mention that. So first of all, they distort the numbers by not telling you about units. I've always talked about that. They don't want you to know the number of units sold, because what it does is it shows the truth and shows they're lying to you. Now, they tell us the consumer's strong. Well, let's take a look and see what happened on Black Friday. First of all, the number of people who are living paycheck to paycheck has increased from 46% to 68% in the last 24 months. Let me repeat that. In the last 24 months, people who work from paycheck to paycheck, it's increased from 46% to 68%. What, are you nuts? Now, the mortgage applications, if things were so good and the consumer so strong, why are mortgage application rejections up 23%? Mortgage refi, you go try to get a refi, they'll reject you. They're up 46%. So if they were so strong, why, again, have we had the number of people working paycheck to paycheck, it's up from 46 to 86, 68%? And why is it all these applications for mortgages and refis and automobiles and credit cards, biggest rejections we ever seen, 23%, 46%, 15%, 21%, never saw that before. Now let's talk about, again, now this is Friday, Black Friday. These are the people who are going shopping. They're going shopping. So again, wages are not keeping up with inflation. And the big thing that's going on, these people who were purchasing have no money. No money. So how are they purchasing this stuff? 95% of the purchases are between layaway, in other words, I'll buy it now, right, and pay it later, right, and also credit cards. And here's the thing with the credit cards. Those poor people have no idea how, there's no way are they going to be able to pay that credit card off in 30 days so they don't even have to pay 22% in interest. So my point is, when they tell us how, boy, things are good, the consumer is strong, the Black Friday's up 6% compared to last year, 2020, it's all a total lie. Again, going back to the number of units, we really sold less stuff. And the real problem is, who are these people that are buying? They're buying the stuff with no money. They're using their credit card. And that's fine to use your credit card as long as you can pay it in 30 days. They have no idea how they're going to pay it in 30 days. They have no clue. So don't tell me the consumer is strong. You're full of crap. Boy, do they lie. It's unbelievable. The problem is the jobs. We're not getting good jobs. The jobs are all in services. We're not getting good jobs anymore. And everything that companies are doing today, they're designing with their software and so forth, is how many employees can I get rid of? That's all they think about, because labor is their biggest cost. And all they think about is earnings. How can I get rid of more employees? What can we do? I mean, can we all, all this AI stuff? Let's figure a way to get rid of 50% of our employees. I mean, this is nuts. So again, consumer inflation in just 5 years has gone up 23%. Wages haven't gone up 23%. What, are you nuts? No way. And that's why today consumer confidence is down and consumer sentiment is down, record low. Because people have no idea, again, all this Christmas shopping, they don't have any idea how they're going to pay for this stuff. Now, overall, in 2024, people who saved for Christmas shopping had $1,700 last year, who went out, paid cash. They weren't going to put it on their credit cards. They budgeted $1,700. This year, it's less than $1,000, right near $1,000, $998. So we'll say $1,000. So why would that be if the consumer is so strong? It makes no sense. Makes no sense. So, and homeowners, again, their cost of living in that home has increased like 38% in the last couple of years. I mean, last 5 years. So to run your household, your electric and maintenance, gone up 38%. Your wages haven't gone up 38%. So how can we have a strong Black Friday? We didn't. And the problem is you got two biggest employers in the United States. There's only two. Auto industry, they employ 10 million jobs. And of course, our real estate industry, 3 million jobs. So total workforce, 170 million, but we only have 10 million in the auto industry and 10 million and 3 million in the real estate industry. So again, we need, for all this to work, we need to increase productivity. That's what we need. We need to increase productivity so we can increase jobs. And it's just not happening. Just not happening. So, and again, when you don't have, you don't have much confidence. You got to have good consumer confidence and sentiment to get people to spend, go out and consume, and so we can increase, reproduce that stuff, increase productivity, our wages go up. That's not what's happening. Bankruptcies are the highest in 15 years. That's another reason why consumers aren't confident. And consumers don't get confident when they drive out the door, they see their neighbor, he's out cutting his lawn. He said, Joe, this is Tuesday. What are you doing cutting your lawn? Tuesday morning. Oh, I lost my job. That's the death knell. That's the death knell. And the purchasing power of our dollar is the problem. See, we've lost this whole idea of you have a great job and everything's about productivity. Because when we had productivity, we were an unbelievable country. Everybody was working. But we don't have production anymore. It's going to get worse with this AI. Well,
You got 1 minute.
okay. I didn't hear that.
Need your pen reset?
No. Okay, so again, I just had a little problem here. We lost our feed. You hear me now, right?
Yeah, I got you.
Okay, so we got just less than about 30 seconds. So again, I apologize for that.
1 minute.
So again, let's get back to our jobs. The current state of our labor market and our wages is terrible. Don't let anybody tell you anything different. Inflation is outpacing wages. Real income increased an anemic 1.6%. 1.6%. What are you, nuts? We lost, this is the first year in history we ever lost 1.1 million jobs. 1.1 million. We never lost that in 1 year. Matter of fact, I believe that number is more than during the pandemic. During the pandemic. So again, we got to get back to production, increase productivity. But the only way you increase productivity if these companies would stop putting all that money into stock buybacks and put it back into business investment. But see, they don't do that anymore. When they get money, when the Fed cuts rates
10, 9,
and money goes into these banks
7,
and the banks loan to these guys,
5,
first thing that you think they're going to increase productivity? No,
2,
they're going to buy
1.
stocks back. So they benefit. More when we get back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
If you want to invest your money and grow your wealth, listen to this.
Hi, I'm Phil Grande at philsgang.com. You know, I get so tired of listening to the same garbage every day, listening to the fake business news network telling you why you should buy this stock, why you should buy, and they're always wrong. Join my gang, philsgang.com, free for 10 days. You're going to learn when to buy a stock and when not to buy a stock. Hey, years ago it was different. You could buy a stock based on fundamentals. You could buy a stock based on earnings. You could buy a stock based on PE ratios. Those days are gone. That ended with QE. That ended when they financially engineered the market in 2008. Gone. Now you got to follow the money. And we have the knowledge because we have the chart. Pro 2 color code chart tells you when to buy, when to sell, when to run like hell.
For a limited time, you can join Phil's Gang free for 10 days.
Check it out, philsgang.com. Get the truth, get the knowledge, and understand how the market really works.
Welcome back. Are you ready to make profits in the stock market? Why not check out philsgang.com or give us a call, 877-600-4264. Now, here's Phil.
And welcome back. So the problem we're having is why we keep talking about inflation. That's all we talk about. We never meet our target. Powell's saying our target's 2%. We're at 3%. I mean, I get so sick of hearing inflation, and there's only one reason that we can't get rid of inflation, because our congressmen, both Republican and Democrat, want big government. Inflation's high because both parties have rigged the budget process for the last 20 years. So you will never get there. In other words, you got to cut, and you got to make the hard cuts, and then we'd be okay. But they're not willing to do it because they want to get reelected. And the only way they get reelected is if they bring the bacon home. We talked about this yesterday. So until we reach a point that all of a sudden we're going to be forced to make these cuts, hell, by then you'll be in a depression. I mean, it's ridiculous. Now remember Silicon Valley Bank, First Republic, Signature Bank? Everybody's forgot about those. Well, guess what? We got another slew of those coming up. Nobody wants to talk about that either. All these banks, these regional banks, are upside down with commercial loans that they got to write off this year. That's going to be a great shorting opportunity. The banks when that happens. I think we're going to get a rally on Wednesday. Everybody thinks not. I think we will, because, again, the Fed, and I talked about this yesterday, in 2024, when they cut 50 basis points, they thought the 10-year Treasury would come down big and the economy would go nuts to the upside. But what went to the upside is yields, because the bond market, Mr. Bond Market, said, are you out of your mind, Powell? We're not going to do this. We got to raise rates because our Congress keeps on increasing our deficit. They keep spending more than they take in, 40% more than the revenues, and you want to cut the rate, your rate, so you can bring down the 10-year Treasury? Are you out of your mind? No, we're not going to go along with that. The deficits are too high. We're not going to do that. We need higher yields because who can we borrow money from to take care of our deficits? China, Japan, the UK, they're not buying anymore. Talked about this yesterday. So the reasons, again, it failed, we got worse reasons it's going to fail on Wednesday, but the stock market will rally. Because the stock market, when all of a sudden, see, here's what the smart money knows. Inflation remains above the Fed target. A cut of 25 basis points is not going to be enough to stimulate the economy. It wasn't enough at 50 basis points. And our deficit, I said a moment ago, keeps on increasing. And we can't attract dollars. We can't attract investors. It's all those three things why it failed in 2024 when they cut rates, hoping the Fed rate, hoping the 10-year Treasury yield come down so car payments, everything would be much lower, failed. We're worse off now than we were then. That's right. So I expect we're going to have a rally when that happens because it's going to be a celebration. Because they're making, again, and here's the real scary problem, is that was a failed policy by Powell in 2023. And when you get failed policies, that's when you inch towards stagflation. So it's going to be interesting to see if they do this again. I just don't see how it's going to work. Maybe I'm wrong. Maybe they figured a way to rig it so that the yields won't go up. I don't know. But common sense tells me if we're worse off with inflation now than we were back last year, and they cut 50 basis points and it didn't work, that wasn't enough to fix the economy. Well, why do we think 25 would be okay? And the deficits keep on increasing, so we got to move the yield up to attract people to come in and be our investors. Otherwise, everybody's moved to gold and silver. So again, we got to have higher yields, and that's what happened last year. So we'll see what's going on with that. But also to remember, be very careful when not enough people look at the bond market when they're trading. The bond market tells you where you should be. It gives you the direction. For example, if you have declining yields, people will shift from bonds to stocks. So that's the beautiful thing about the bond market. It tells you where to be. All you have to know, if we got declining yields, okay, people are going to shift from bonds and they're going to be starting to buying stocks, and the market will go up. That's the beautiful thing. We'll have declining yields, we get lower borrowing costs. And then lower bond yields tells us that we're going to get lower inflation. Then we get confidence in the economy. That's what you need. Now, at the same time, we're signaling a slowing economy when yields are declining, but it indicates in the future that our economy is going to grow out in the future. Now, rising yields, on the other hand, and by the way, when we have declining yields, you want to be in growth stocks. As a matter of fact, what you should do is just take the ETF SPYG, Spider Growth, just go into the Spider Growth stocks. If I'm going to put it up right now and see where we are with those. We've been really doing terrific with this stock market, and you've got to learn how to sell short. It's your only defense. If you don't learn how to sell short, I don't know what you're going to do when this crash finally does come. Now, nobody thinks the crash is ever going to come again. I get that, okay? But it will. So now there's the growth stocks. Let's see what the value stocks are doing. put them up for you right now, SPYV. Okay, so there's your growth stocks. And remember, you want growth stocks when yields are declining. Now let's take a look at value stocks. Value stocks are doing better than growth stocks. So the bond market tells you what stocks to be in. That's the one. Very few people ever look at the bond market. And by the way, they did a survey. 90% of traders don't even look at volume. They don't look at volume or a stochastic trend. They depend on their information from the jibber jabbers, the financial jibber jabbers. How can you trade without looking at the bond market and understanding, okay, what's going on here with the bond market? Because if you know you got declining yields, you know I better be in tech stocks, I better not be in banks. If I'm in banks and all of a sudden yields are coming down, I better short banks and go long tech. What a wonderful thing to follow the bond market. It helps you so much. Helps you so much. So if you take a look right now at what's going on, these tech stocks, like take, for example, Apple. Apple's been holding in. It's one of the few tech stocks. It's got great relative strength, and it's above all support. But when you go to the rest of the stocks, the rest of the tech stocks, I mean, there's some real problems, okay? Take a look, example, if you go and take a look at, here, let me give you a couple of these stocks. They're really doing horrible. Let's look at the Qs for a moment. If you knew how to sell short, look at the money you would have made shorting if you knew how to sell short. And here's the problem. If you look right now at the Qs on November 21st, gone from a low of 580 to 625. And people say, oh, that's great. That's why I'm making a lot of money. No, you're in a big risk because here, how much was that?
8%.
That's an 8% gain. I would never be in that because any one of those days you were trading on the way up. If you were, for example, were in the Qs on the 25th of November, you'd be all excited, boy, I'm making money. But you don't understand. You're not, because the trend's going down. So you got one of the riskiest trades you ever could make. Because when the trend is down and you bought the Qs and you got in, you're happy, you're in it, you bought, let's say, the Qs at, I don't know, you bought them at $595. Now the next day you're up to 610. Boy, you're feeling good. The next day you're up to 616. What you don't realize, the next morning you could wake up. You closed at 616. The next morning you could wake up and you're going to be back down to about 582. That's the risk you're taking when you're buying stocks and the stocks are on their way up and you got a downtrend. This is why 90% of people lose money. Never do that. Never do that, okay? And they're telling you to do that every day. And so, again, now, when do you buy the Qs again? When the Qs start making a new high and you got more volume coming in and you got more buyers, of course, than sellers. And how would you know that? Well, you look at your volume, you watch your stochastics, okay? On my chart, which we designed our own chart, it goes from red to green, so you don't have to think about it. And the beautiful thing on our charts, when you're looking at the Qs, and if you did get in at, let's say, 588, or you got in at 594, it's red. So you know you're taking a huge risk, and you could lose it all. Because anytime your stock is going up, and on my Pro 2, it indicates that all the candlesticks are red. But even if you got your chart where your candlesticks are red, green, and green, looks like a Christmas tree. If you're in a stock that's going up and your trend is down and you keep buying, as I said, you could start out one morning at 594 and then you're up to 612 and you're celebrating, and next morning you wake up, you're back down to 570. That's how dangerous it is. Now take a look too at ARC. This is one of our big shorts. We started a short ARC back in November 10th. It was right around the short at that time. Let's see, where did we get it? We get it in about 82.20, I think it was. And it dropped from 82.20, and it dropped down to a low of $70.44. That was a nice trade, nice and safe, because the trend, how much was that? Okay, that's a nice trade because the trend is 15% we picked up, but here you're doing it with no risk. Because I should say no risk, there's always risk, but the trend is going down, so we're shorting, we're following the trend. And then when the trend is still going down and the stock starts going up, never buy on a dip. Never start buying on a stock going up when it's in a downtrend. Now, you can do what we call swing trades.
1 minute.
You get into a chart that the time frame's condensed, so you could be in for 2-3 days and do a swing trade. For example, if you got into ARC when it was around $72, and you got out when it was around $79,
10%.
that's a 10% gain in a very short period of time. But we used a different chart. We used the chart that the time frame is condensed. Then bang, we're out. We're out. Now we wait to use our other chart, which is going to be long term. And again, if you just make sure when you're trading, you're following the money, you're following the trade. 90% of people lose money because, one, they don't short, they're afraid to short, and 90% of people lose money because they're buying on dips. They're buying on dips. And they're buying when a trend is going down. I mean, and you're insane to do that. So, anyways, over the weekend, we'll see what news comes out. But all I can tell you, next Wednesday is going to be very interesting. We could have a rally in the stock market and the bonds together. See you on the charts.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.